Welcome back to PennyWise Perspectives, your go-to channel for everything personal finance. Today, we're diving into a crucial topic that's often overlooked: 10 best ways to make $1 million. The idea of making $1 million is a dream for many, and it's a goal that often represents financial success and security. While there's no one-size-fits-all approach to accumulating $1 million, there are various strategies and paths that can lead you to this financial milestone. In this video, we'll explore 10 of the best ways to make $1 million, ranging from traditional methods to innovative approaches. Remember that achieving this goal requires dedication, hard work, and smart financial planning. Disclaimer: I am not a financial advisor. The content provided in this video is for educational and entertainment purposes only. Now, let's dive into today's topic. 1. Investing in stocks. Investing in stocks can be a powerful way to grow your wealth over time. To succeed in stock investing, consider these key points. Diversification. Instead of putting all your money into a single stock, create a diversified portfolio. Diversification spreads risk and can help you weather market fluctuations. You can achieve this by investing in individual stocks across various industries, or by using exchange-traded funds, ETFs, that provide exposure to a broad range of stocks. Long-term perspective. Historically, the stock market has shown strong returns over the long term, despite short-term volatility. Avoid trying to time the market or make quick profits. Instead, focus on your long-term financial goals and stay invested. Research and education. Before investing, educate yourself about the stock market, different investment strategies, and the companies you're interested in. Many reputable financial websites and books offer valuable resources for beginner and experienced investors. Risk tolerance. Assess your risk tolerance and invest accordingly. Stocks can be volatile, and it's important to have a portfolio that matches your comfort with risk. Consider speaking with a financial advisor to help determine your risk tolerance and investment strategy. 2. Real estate investing. Real estate is a tangible asset that can provide both rental income and property appreciation. Here are some additional insights into real estate investing. Property selection. Carefully research and choose properties based on location, market conditions, and potential for rental income. Consider factors like job growth, amenities, and the overall economic health of the area. Property management. If you choose to invest in rental properties, effective property management is crucial. This includes tasks like finding reliable tenants, maintaining the property, and handling financial aspects like rent collection and expenses. Real estate investment trusts, REITs. If you prefer a more hands-off approach, you can invest in REITs. These are companies that own, operate, or finance income-producing real estate. REITs often provide a way to invest in real estate without the responsibilities of property management. 3. Entrepreneurship. Starting your own business can be a rewarding path to wealth, but it comes with unique challenges. Business planning. Before launching a business, create a comprehensive business plan. This plan should outline your business goals, target market, competition, marketing strategy, and financial projections. A well-thought-out plan increases your chances of success. Financial management. Effective financial management is essential for business success. Keep a close eye on your business finances, including cash flow, expenses, and revenue. Consider hiring an accountant or using accounting software to help manage your finances. Adaptability. Entrepreneurship often involves facing obstacles and setbacks. Being adaptable and willing to learn from failures is crucial. Continuously seek ways to improve your products, services, and operations. 4. Savings and compound interest. Saving and harnessing the power of compound interest is a reliable, low-risk method to build wealth. Consistent savings. Establish a habit of regular saving by setting aside a portion of your income. Automate your savings by having a portion of your paycheck deposited into a dedicated savings or investment account. Compound interest. Compound interest occurs when your interest earns interest over time. Take advantage of compound interest by choosing savings accounts or investments with competitive interest rates. Over the long term, even small contributions can grow substantially. Emergency fund. Prioritize building an emergency fund that can cover 3 to 6 months' worth of living expenses. This fund provides financial security and prevents you from dipping into long-term investments during unexpected financial challenges. 5. Online businesses and side hustles. In the digital age, there's a multitude of opportunities to generate income online. Affiliate marketing. Promote products or services on your website or blog and earn a commission for each sale made through your referral links. E-commerce. Start an online store to sell physical or digital products. Platforms like Shopify and WooCommerce make it accessible to set up an e-commerce business. Freelancing. Leverage your skills in areas like writing, graphic design, web development, or digital marketing to offer freelance services. Freelancing platforms like Upwork and Fiverr connect freelancers with clients. Content creation. If you have expertise or a passion for a particular topic, consider creating content through blogging, podcasting, or YouTube. You can monetize your content through ads, sponsorships, or merchandise sales. Real quick, fam, have you seen these awesome t-shirts? Make sure to check out my Etsy shop link down below in the description and rock these funny tees like a boss. Now let's get back to the video. 6. High-paying careers and education. Pursuing a high-paying career often involves investing in education and training. Here's what you need to consider. Education investment. Fields like medicine, law, engineering, and technology typically require advanced degrees or certifications. While these professions offer high earning potential, they often come with substantial educational expenses. It's essential to weigh the long-term income potential against the cost of education. Student loans. To finance their education, many individuals take out student loans. While these loans can be a means to invest in your future, they also come with repayment obligations. It's crucial to have a clear plan for managing and repaying student loans, as excessive debt can hinder your path to wealth. Career planning. Research job prospects and earning potential in your chosen field. Consider factors like demand for professionals in your industry, geographic location, and potential for career advancement. A well-thought-out career plan can help you maximize your income over time. 7. Franchise ownership. Investing in a franchise business can be a way to enter the world of entrepreneurship with some established support. Here are some considerations. Research and due diligence. Before purchasing a franchise, conduct thorough research. Evaluate the franchise's track record, financial health, and the level of support they provide to franchisees. Consider your personal interests and skills to find a franchise that aligns with your strengths. Financial planning. Assess your financial situation and determine how much capital you can invest in a franchise. Be prepared for initial franchise fees, ongoing royalties, and operating expenses. Careful financial planning is essential to ensure your franchise's success. Market analysis. Analyze the market in which you plan to open your franchise. Consider factors like competition, target demographics, and local demand for the products or services the franchise offers. A well-chosen location can significantly impact your franchise's success. 8. Financial market trading. Trading in financial markets can be a high-reward, high-risk endeavor. Here's what you should keep in mind. Risk management. Financial market trading carries the risk of significant losses. It's essential to have a well-defined risk management strategy, including setting stop-loss orders and diversifying your investments. Education and training. Trading successfully requires a deep understanding of the financial markets and trading strategies. Consider investing in your education through courses, books, and practice trading accounts before risking real capital. Market research. Stay informed about economic events, market trends, and geopolitical factors that can influence financial markets. Continuous research and analysis are crucial for making informed trading decisions. 9. Innovative startups and tech investments. Investing in startups and technology companies can be lucrative if approached wisely. Due diligence. Thoroughly research startups and tech companies before investing. Look for innovative solutions, strong leadership, and growth potential. Consider seeking advice from experienced investors or financial advisors. Diversification. As startups can be high-risk investments, consider diversifying your portfolio. Don't put all your capital into a single startup. Spread your investments across different startups or sectors to reduce risk. Long-term perspective. Understand that startup investments often require patience. It may take several years for a startup to reach its full potential. Be prepared for the possibility of losses in the early stages. 10. Inheritance and windfalls. While not something you can actively plan for, inheritances or unexpected windfalls can significantly boost your wealth. Financial planning. If you receive a windfall, whether through inheritance, lottery winnings, or a legal settlement, consider seeking guidance from financial professionals. Develop a plan for managing the funds wisely, which may include paying off debts, investing for the future, and ensuring financial security. Avoid impulsive decisions. Sudden wealth can lead to impulsive spending or investment decisions. Take your time to assess your financial goals and make informed choices that align with your objectives for long-term financial security. Becoming a millionaire is an achievable goal through various means, but it requires careful planning, discipline, and often a long-term perspective. Whether you choose to invest in stocks, real estate, start a business, or pursue a high-paying career, it's essential to set clear financial goals, manage your finances prudently, and stay committed to your path to wealth. Remember that everyone's journey is unique, and there's no single best way to make $1 million. Success comes to those who are willing to work hard, learn from their experiences, and adapt to changing circumstances. Awesome! We've covered all 10 best ways to make $1 million, equipping you with valuable insights to optimize your future success. Please comment below any money-related topics you'd like for me to cover in a future video. If you loved today's valuable video, consider smashing that like and subscribe button. Don't forget to share it with a friend. Together, let's embrace abundance, develop financial intelligence, and make our dreams of financial freedom a reality. Fam, have you seen these awesome t-shirts? Make sure to check out my Etsy shop by using the link in the description below and rock these funny tees like a boss. Thanks for watching, and we'll catch you in the next video.